Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The blockchain landscape today is dominated by transformative regulatory developments, with the Genius Act receiving presidential endorsement after clearing congressional hurdles. This legislation establishes a federal framework for stablecoins, mandating one-to-one dollar-backed reserves and monthly transparency disclosures, which could dramatically reshape the digital asset ecosystem by attracting institutional capital, previously deterred by regulatory ambiguity. Market observers anticipate this clarity will accelerate integration between traditional finance and cryptocurrency platforms, potentially establishing the U.S. as a global leader in digital asset innovation. The immediate market response has been notably bullish, with total cryptocurrency market capitalization surging toward $4 trillion as Ethereum and XRP achieved double-digit gains following the legislative progress. This regulatory milestone may also prompt other jurisdictions to expedite their own digital asset frameworks to remain competitive in the emerging financial architecture. Concurrently, institutional adoption appears poised for acceleration, as Grayscale has confidentially filed draft registration documents with the SEC for a potential initial public offering. This strategic move signals growing confidence in cryptocurrency's mainstream acceptance and could provide the firm with expanded capital access to develop new investment vehicles. The market impact could be profound, as a successful IPO would validate the asset class for traditional equity investors while potentially creating new pathways for retail participation through regulated financial products. This development coincides with reports of corporations like LQWD Technologies expanding their Bitcoin treasuries, now holding 181 BTC acquired at an average price of $49,174. Reflecting a strategic commitment to Bitcoin as a reserve asset despite current prices exceeding $118,000. Such corporate accumulation patterns suggest deepening institutional conviction in Bitcoin's long-term value proposition, particularly as a hedge against currency debasement. On the monetary policy front, discussions around M2 money supply dynamics resurface as a critical contextual factor for cryptocurrency valuations. Historical analysis reveals periods of rapid M2 expansion correlate strongly with Bitcoin price surges, as witnessed during the post-2008 quantitative easing programs and 2020 pandemic response, with Bitcoin's fixed supply contrasting sharply with flexible fiat systems. Investors increasingly perceive it as an inflation hedge during monetary expansion cycles. This relationship suggests that ongoing central bank policies could continue driving capital allocation towards scarce digital assets, though the exact transmission mechanisms warrant further study. Current market behavior appears to validate this thesis, as Bitcoin maintains its position above $118,000 despite short-term volatility, with technical indicators suggesting underlying bullish momentum remains intact despite cooling price action. Technological innovation progresses rapidly, highlighted by Eclipse launching its token generation event with a $1 billion ES distribution targeting community incentives and protocol sustainability. This Layer 2 solution merges Ethereum and Solana technologies, aiming to enhance scalability while maintaining security. Concurrently, RiskZero's incentivized testnet deployment on Base Network creates a decentralized marketplace for zero-knowledge compute, potentially revolutionizing how cryptographic proofs are generated and verified. These infrastructure developments could significantly reduce barriers to enterprise blockchain adoption while creating new economic models for distributed computation. The market impact might manifest through increased developer activity and cross-chain interoperability, potentially driving value toward platforms enabling these advancements. Regulatory clarity extends beyond stablecoins, as the White House confirms exploratory efforts toward establishing a de minimis tax exemption for small Bitcoin transactions. Such policy evolution could catalyze cryptocurrency's transition from speculative asset to practical payment mechanism by eliminating tax reporting burdens for minor purchases. This aligns with growing discussions around Bitcoin's potential role in daily commerce, particularly as solutions like the Lightning Network mature. While implementation details remain undefined, the administration's receptiveness signals recognition of cryptocurrency's utility beyond investment vehicles, potentially fostering broader consumer adoption if enacted. Market dynamics reveal intriguing rotational patterns, with altcoins like Bonk surging 19% on heavy volume as capital flows into higher beta assets. This Solana-based meme token's breakout coincides with broad altcoin outperformance relative to Bitcoin, reflecting renewed risk appetite across digital asset markets. Such rotational activity suggests maturing market microstructure where capital dynamically reallocates based on relative value opportunities, though the sustainability of meme coin rallies remains debated among analysts. This trend extends to tokens like Doge and XRP, which posted significant gains despite Bitcoin's sideways movement, indicating diversified investor interest across the crypto ecosystem. Corporate treasury strategies continue evolving, with public companies increasingly utilizing debt instruments to expand Bitcoin holdings. This leveraged accumulation model represents a sophisticated approach to corporate Bitcoin adoption, though it introduces new dimensions of financial risk during market downturns. The practice has gained legitimacy through MicroStrategy's multi-year demonstration, now emulated by firms like Metaplanet and Blockchain Group. Market observers note that such strategies effectively transform corporate balance sheets into Bitcoin investment vehicles, creating novel exposure pathways for shareholders while potentially reducing circulating supply through long-term holding patterns. Long-term market structure analyses provoke debate about whether Bitcoin's historical 4-year cycle persists amid institutionalization. On-chain metrics suggest the current cycle remains consistent with prior patterns, though ETF inflows introduce unprecedented buying pressure exceeding daily issuance. This institutional participation may be elongating the cycle's euphoria phase rather than eliminating cyclicality entirely, creating a hybrid model where behavioral psychology interacts with structured capital flows. Such evolution could result in less parabolic but more sustained appreciation periods, fundamentally altering retail trading strategies that historically relied on volatility extremes. Privacy and security innovations emerge as critical frontier, with Bitcoin developers proposing quantum-resistant protocol upgrades. A new draft would freeze vulnerable legacy addresses preemptively, marking unprecedented intervention to safeguard against future cryptographic threats. This reflects growing awareness of quantum computing's theoretical risks, though practical implementation would require careful community consensus. Simultaneously, Bitcoin Solaris garners attention with its accessible cross-platform mining model, promising device-agnostic participation through its Solaris Nova application. Its pre-sale success highlights investor appetite for projects democratizing blockchain participation, though technological execution remains unproven. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.